Before we move on towards the second component of our strategy, if you remember, we discussed that we have three components of the strategy. One was Elliot Wave, second was indicators, and third we will discuss about the smart money concept. Of course, that won't be a long discussion, but we need to understand the smart money as well. So in this lecture, we will discuss about the indicators, the second component. But before we move on, I want to add a couple of more things. One thing is that never try to trade every single coin available. Try to pick the coins very carefully. By this I mean that pick only those coins that have very clear wave structure. Only then you will be able to trade that. If you don't know, or if you can't figure out the wave structure of a coin, it's simply not a good trade to take. Don't worry, we have thousands of coins and we can very carefully just filter out 50 to 60 projects that are creating very clear wave structure. For example, let's see this Solana, and if I look at the Sol chart, I can very clearly count the waves. So wave structure is very clear. We don't see long wicks in there. We can very clearly count 1, 2, 3, 4, 5, and just by looking at the chart, you will be able to see that yes, the waves are clear. So once the waves are clear, you should add that coin to your favorite list for trading. Now, let me give you an example of a bad wave structure. Yesterday, I was looking at a coin that was, I think, FIS USDT. Now, if you look at this, you only see pumps and dumps, huge wicks with small bodies, no clear wave structure. You don't know which way the price wants to go. You can't count any wave in there. There is no clear wave structure. So this is an example of bad, you can say, wave structure, and we don't want to add these type of coins to our trading list. So I have not added FIS, for example. I will never add that. Now, from where you will get these coins? That, of course, if you don't have knowledge, you would be thinking that from where Faz got this list. So again, out of these coins, whenever any coin is not making a clear wave structure, I just don't trade that, but I just keep good projects here in my list. You just need to go to Binance.com, just go to Binance, go to the markets, and in market section, you will see all the coins that are listed on Binance. As the Binance is world's largest crypto exchange, of course, you will find thousands of projects in there. Now, you can do a couple of things. One thing you want to do is just arrange it by market cap, the column of market cap, and you will see here the top projects based on the market cap. And as just to simply let you know that market cap means that how much money people have invested in this coin. So if you see here, the Bitcoin market cap is here, and so on. So you move on in this list and you can find out the coins and just add them there in the trading view. Just click on this plus and just search that coin that you saw on the Binance and click on add, and it will be added to your list. Also, time and again, every day when you would like to look at the market, or you are going to start the trading, just try to search here according to the 24 hours change. And I think I mentioned this earlier also, I love to trade the coins that has more volume being traded on that specific day. So if you see a coin that has moved a lot, for example, 5% is not a good move for me. If it is 10, 12, 15, 20, sometimes 30%, sometimes coins are very volatile for last 24 hours. I love to trade those coins. So we look for volatility as well. So every day just come here and try to see, for example, Ocean protocol. We see that this coin is moving, and if you search here Ocean, I think it is added already in my list, but if I see here Ocean USDT, and if we look here, so this is Ocean. So I think it is already added to my list, and yes, it has very clear wave structure. So this has volume that is being traded today. So this is daily chart. If we go down to a smaller 30 minutes chart, we can clearly see that this coin is moving a lot, so we have a lot of volatility in there, and of course we want to trade the volatility so that we can just quickly get in and out of the trade, especially when you are day trading or scalping. Now if we discuss about our components, we have the second component we are going to discuss today. Now what are the indicators that I would like to add? Of course there are thousands of indicators available on TradingView, and you can just see the long list here, but what I want you to add to your charts are the two indicators only. One is relative strength index, we also call it RSI, and the second one is moving average convergence divergence, we also call it MACD. So MACD, moving average convergence divergence, and RSI, relative strength index, these two indicators are what we want to add to our charts. So once you will add them, those indicators will appear here. So this is how your chart will look like. So I like to keep my price action on the top, then I have the RSI indicator. So this one, the blue one that you see here with white graph, this is RSI, and this you see at the bottom is MACD, moving average convergence divergence. We want to see this graph or this chart movement also along with the price action, and then take our trade, just to add more confirmation to our trade. Now how we trade this, if you see here, RSI is just a simple graph. MACD, if you see, we have graphs, also we have histogram. So if we talk about MACD, this is zero line, this green line that I am drawing here. So this green line is zero line. When the price moves up, the graph turns green or histogram turns green. When the price goes down the zero line, the graph or histogram turns red. So this is MACD, this is RSI. So the first thing that is important is that you count 5 Elliott waves. So 1, 2, 3, 4 and 5. We know now that how we trade them, trade the Elliott wave. We try to long here at 4, we try to long at 2, we try to short the market at wave 3 level, and we try to short the market at wave 5 level. We also discussed that when we talk about the correction, that is ABC, I told you that how I like to trade ABC. So when we talk about ABC, I short A here at the top, I try to short it, I try to long the A for the price to go in direction of B. So this is where I like to long. I like to short here when the price is at B and we are expecting C to form, and I try to long here at C because this is where the next impulse wave starts. And we have seen in the previous lecture the practical example also where I tried to long the C. So remember that the 4 wave we tried to long, and also we saw an example when I took an entry for wave 2 so that we can catch wave 3. So as we now know that this is Elliott wave, and let's just first discuss about the short, that how I try to short the market and how I compare it with RSI and MACD to find further confirmation. Let's just draw RSI here. Let's draw the upper band of RSI. So let's assume this is the upper and this is the lower band, and in between there will be graph of RSI. And also let's just draw one for MACD. So this is upper and lower line for MACD. Let's just turn this to orange so that it's clear. So when we will discuss about RSI, when the price moves up 1, 2, 3, 4 and 5, you will see the higher highs in the price action. So this high and 3 high will be higher than, of course, wave 1 high, and then 5 will be higher than wave 3. So you will see higher highs on the price action. Now RSI will do the same. When you will see the graph of RSI, when wave 1 is formed, you will see a higher high on RSI. When wave 3 high is formed, you will again see a higher high on RSI. But when wave 5 is formed, on price action, the price will be higher, but on RSI you will see a lower high. whereas on price action you will see a higher high. I will show this on the chart also, so that you can get a very clear idea. So this is one confirmation added other than that 5 Elliott wave structure, and we are now sure that this is wave 5, and almost with confirmation we can now short the market from there. Now we don't stop here. We actually have added another indicator to add more confirmation. Remember, the more confirmed trade you have, the more chances you have to win the trade. So that's why we like to add some further confirmation to this. Now when we talk about MACD, of course MACD has histograms. So when the wave 1 is formed, you will see MACD creating histograms like this, and then the price will go lower for wave 2. So of course that will go lower. So you will see the MACD creating a histogram. It will come down and histogram will be created to the other side of the zero line. Once wave 3 is formed, you will see again MACD histograms will come to the positive side, and this time the histograms will be higher because the price is moving higher. Once you will see wave 4, MACD will again go down towards the opposite side. It will create some histogram there. And once wave 5 is formed, again MACD will come towards the positive level, but you will see here the histograms will be lower. So MACD will tick lower again for wave 5, similar to RSI creating a lower high. For wave 3, the histograms will be higher. For wave 5, the histograms will tick lower. This actually show the weakness in the market. Although the price is ranging higher, but we see that RSI and MACD are ticking lower, and we call it the weakness in the market. So market is getting weaker and weaker. So these are the signs of weaknesses. We call this as divergence. So if we talk about this, when the price is higher, RSI and MACD are ticking lower, we call this as bearish divergence. So this is called bearish divergence on RSI, and also if we talk about MACD, we call this as bearish divergence. So when you add these two indicators along with your Elliott wave or price action, and you see that the price, although the price is ranging higher, the price is making a higher high, but you see RSI making a lower high and MACD also ticks lower. That's where you say, well, the market is now weak, the move is weak, and that we have completed the fifth wave and we expect the market to go down, and that's where we short the market and we take a short position here and we see that the market goes down. Now the same thing will happen, but in opposite way when we talk about the longing opportunity, or in case you want to long the market. So I have just inverted the chart just to show you the picture when you want to long the market. So the criteria will remain same, but the only difference will be that the market is going down. So if you see 1, 2, 3, 4 and 5 and you want to take a long position here and you want to take the entry. Now what you can expect when you want to take a long position? Well, again you will see that the RSI, market price creates 1, 2, then a lower low 3. RSI also creates a lower low, a low that is lower than the previous, right here. So you'll see a lower low, but for wave 5 the price will create a lower low again, but you will see a higher low on RSI. So opposite to bearish divergence. This is what we call as bullish divergence. Same for MACD, you will see a histogram tick. So histogram, and when the wave 3 will be formed, histogram will tick again lower because the price action is lower. But for wave 5, although the price will be lower, you will see a lower low, but on histogram you will see a higher tick. So histogram will not fall lower again. This is again a divergence, but this time we call this as bullish divergence. So this is now called bullish divergence. Also for MACD, this is bullish divergence. So bearish versus bullish divergence. So I hope this is clear that how I trade this. Now, how you will trade this on when we talk about charts? Well, it's very simple. First thing, let's go down to BTC chart. The chart is inverted. Let me just clear it. So this is BTC chart right now. Now you go to any time frame, 15 minutes, 5 minutes, 1 minute, 1 second, 5 second, daily, weekly, monthly, whatever time frame you are on, this formula or this criteria will work. If you don't see this, simply stay away and don't take the trade. We have hundreds of opportunities that will come every day, and if you take only 3 to 4 confirmed trades per day, your portfolio will multiply very quickly. So we don't want to take every single trade. We will trade only when our criterias meet. So now let's see this chart. Let's just cut it for the latest price action and try to see before the market dropped, does our criteria meet or not. So this is a weekly chart. Let's move down to daily chart to see more detailed price action, and let's just cut it right before the market dropped. So we cut it here, right? Now let's try to see that when we said RSI and MACD, first thing you want to do is you want to do the wave count. So we can clearly see here 1, 2, 3, 4, something here where the price is higher. As you can see very clearly here that the price is higher than the previous, right? So we see here that the price, this top and this top, so price definitely went higher. Now, can we see our MACD and RSI bearish divergence? So we are expecting the price, as the price was moving higher, we have 5 waves completed. So what we want to see next is we want A, B and C. So before we short the market here at wave 5, we want to add some more confirmation, that is MACD and RSI. Now if you see here, you can very clearly see that wave 1, as you can see the RSI tick here, wave 1 was lower, then wave 3 was formed. As you can see this point and this point, this was higher, price action was higher. But if we look at wave 5, can you see the difference? Just look at wave 5. You can even go down to 12 hours chart to add more details, to see more details. So look at wave 5 here. We have 3, the price came down, then we have 5, and for 5 we see higher high on chart. On the price action, the price was higher. On RSI, just compare the same areas. This RSI is higher, but here you see a lower tick on RSI. You can clearly see the difference. Although the price went higher, the RSI failed to go higher. We just compared these two, and you can see that MACD also failed to create a higher tick on histogram between this point and this point. And if you see the MACD graph also, we can very clearly see that these two areas are lower. So this is called bearish divergence. Higher highs on price action but lower highs on RSI and MACD. This is where we are sure that market is getting weaker and market is ready to dump or go down. That's where we will open a short position, and if I play the price, you will see that the market created actually a very good downward movement. Let's try to see more coins, more examples, and see if this strategy works each time or not. So let's go to Sol or Solana. Let's go to daily chart and let's cut the price right before the drop happened, just to confirm that our criterias were there or not before the drop happened. Now even if I see at Solana chart, we can clearly see 1, 2, 3, 4 and 5. Let's move up further so that we can see the whole price action. And although now wave count is clear, so 1, 2, 3, 4 and 5, but what we want to see now is that what about our other two criteria, that is MACD and RSI? Can we see those also meeting? So as you can see, wave 3 and 5, we will just zoom in and try to look at wave 3 and wave 5. If you see the price action, these two tops, so wave 3 and wave 5, although wave 5 is higher and wave 3 is lower, we see on RSI wave 3 is higher, wave 5 is lower. And when we talk about histogram, we can clearly see that wave 3 histogram is higher and wave 5 is lower. But if you see the previous price action, means that between wave 1 and wave 3, you can clearly see, let me just make this bigger so that you can see. Just look at wave 1 and wave 3, look at the RSI, isn't it higher? So when the price is higher, we see higher, right? And MACD also, if you see from wave 1 to wave 3, you can clearly see a higher histogram. But when the price created wave 5, although the price action was higher, but we see very clear bearish divergence. RSI failed to make a higher high, MACD failed to make a higher tick. Once we see that these criteria are met, we don't buy now, we sell it here. So when this happens, we just sell it and you will see the price will drop. So here we are right now. So we clearly have 1, 2, 3, 4, 5. Now what I see here, without going into details, I can clearly see that this is A. Now B is being formed and we are still here. We will see the C. So I hope this makes sense, that how we use bullish and bearish divergence. Let's take an example of bullish divergence as well. We have seen only bearish divergence. Let's just go to BTC, the big boss, and try to understand the bullish divergence when you want to long the market. Now from here we saw this huge move towards the upside. Let's just try to see, can we see our criteria being met before this impulse started? 1, 2, 3, 4 and 5 towards the downside. Now let's see if we can see our criteria meeting. So we go to RSI and MACD and we look here. Now if you see this 1 and 3, you can clearly see a lower low on RSI, and you can clearly see, so these were the point, and then for this wave we have this area, so lower low. On MACD also, if you compare, you have this, and here also this area. So MACD is clearly lower, RSI is clearly lower. But when we saw the next move towards the downside, we see that RSI started to move higher and MACD also even went to the positive side, although the price is ranging lower. This we call as bullish divergence, the opposite of bearish divergence, when the price is making lower low, but the RSI and MACD are actually bullishly diverging. They are making higher lows, and histogram is ticking higher as well. And once this happened, you will of course start, you can very confidently start taking entries. So put some amount here. If the price drops a little, put some more amount here, keep buying, because you have already seen the divergence. That means somewhere here the price may range a little and suddenly you will see a push towards the upside. And that is exactly what happened here. So if you see, BTC just exploded from there.